So this is part number 9 of this multi-part video series. I never imagined that this video series would become so many parts and I have so much to cover. We've just started in this video series because we have to look at a lot of weekly chart examples. One of them is Thermax, which I wanted to discuss with you. As per the regulations, we are looking at old charts. We are trying to understand old bases and how they have done in the future. In the previous video, that is part number 8, we looked at some technical things to look for on the market Smith chart to shortlist stocks. We know fundamental criteria now to shortlist stocks. We also need to understand the technical criteria. So remember that 6 criteria which I discussed in yesterday's video. What were the 6 criteria? We will check that on this chart, okay? So that is like a practical example. So I go to Market Smith, I click on product, I click on support, scroll down. Yes. So on the Market Smith weekly chart, it normally look like this. Assume that these candles are not there after the breakout, okay? Just before the breakout, what are the 6 things we are looking for? The green shaded area, the blue shaded area, the red shaded area, this is already marked on the Market Smith chart before the breakout. Okay. So those are the 3 things out of 6. Then we need to look for the green dotted line, which is the exact pivot point. Okay. The buy point. The blue zone is the 5% buying range. Then we need to look for clearly marked pattern, which is marked in green color on the chart. And then the closing price of that week, just the week before that weekly breakout, this particular bar, the closing price should be between the pivot point and this red line. Red line is the 10-week simple moving average. So on our chart, it is the blue line, the 10-week simple moving average. So these are the 6 things to look for just to shortlist that stock, just to consider that stock for positional trading. Doesn't mean you have to buy, because we are just shortlisting stocks. Then we have to do liquidity analysis, comparative analysis, technical, fundamental, and market analysis, and then take a decision as to what to do. We are just trying to shortlist stocks because after putting the filter, we are getting like 80 to 100 stocks. Out of that, we need a narrow list of stocks on which we can focus our further investigation on. So on the Market Smith chart, now I cannot show you the Market Smith chart of Thermax because I'm not allowed to show you charts with latest 3 months data. It will come in the chart. So that is why I'm showing you trading view. Okay, this is old chart as per the regulations. So this is how it looked. Just a second. Yeah. So I've expanded. This is how it looks. This is the weekly cup with handle base. Remember previous video, we discussed 4 patterns. You don't need to learn them. You don't need to memorize them. It's already marked on the Market Smith chart. So cup with handle, cup without handle, double bottom, flat base, the 4 most common patterns, okay, out of which this is cup with handle. So let me draw that cup with handle for you. So it looks like this. So this is the cup and that is the handle. Okay, that's the cup with handle and this is the pivot point, the high of this bar. That's how it looks like. Okay, so that's the cup with handle. Let me remove this. How to remove this? Just a second. Yes. Let me remove these dots as well. So the high of this candle is the pivot point. So this is 2560. So let's draw the blue zone. Okay, 2560. So I will go to rectangle. Sorry. I'm doing it practically for you so that this becomes a part of your system. So 2560. And what's the buying range? 5% above 2560. So I have this calculator with me here. So 2560 multiplied by 1.05, 2688. Right. So this is 2688. See, that's the buying range. So after this breakout, after if the stock price goes up, enters this range, you start buying shares. Okay. Next, what's the selling range? So this number would be 5% below 2560, correct? So that is 2 2560 multiplied by 95%, 2432. So this is 2432. Then this is 8% below 2560. So 2560 multiplied by 92%, 2355, 2355. Okay. And then the color should be red. Fantastic. Looks good. Buying range, stop loss range, and then the selling range. Okay. So, so first let's make this green color. Then this will be 25% above the 2560 pivot point. 2560 multiplied by 1.25, 3200, 3200. Then this number is 20% above 2560. So 2560 multiplied by 1.20, 3072, 3072. Okay, so now we have the buying range. I will click here. So buying range, stop loss range, and the selling range. So now we will move the price forward and we'll see when the stock gives us the opportunity to buy. Now, this I am assuming, see, when you look at a chart by the end of this week, so this is 17th July 2023, by the end of that week, the chart will look like this on your market smith or whatever trading view or what. We don't know what is going to happen in the future. We just know these buying and selling zones. Okay. Now remember those 6 conditions which I discussed. We have those 6 conditions here. We have a clearly marked blue zone, sorry, blue shaded area, red shaded area, green shaded area. So out of 6, we have 3 already marked. The remaining 3 are, we have the clear pivot point, which is the low of this blue shaded area. Okay. We have a clearly marked cup with handle. Okay. Which is there on Market Smith. And last one, the closing price of that week is between the pivot point and this blue line, which is the 10-week simple moving average. So if I click here, see 10-week simple moving average, SMA. Okay. The price is between 10-week simple moving average and the pivot point, which is the low of the blue shaded area. So basically, this price should be between the two blue items, the blue line and the blue zone. The price should be squeezed, sandwiched between the two. Okay. The percentage distance does not really matter because that we have covered in filters. It can't be more than 25%. Okay. So we have all the technical criteria available. So what are we supposed to do? We will shortlist the stock. Then we will do liquidity analysis, comparative analysis, technical analysis. In technical analysis, we will look at the base count. Then we will look at the relative strength line. Is it on at a 15? Is it at or near the 52-week high? Okay, those are the things we look at in technical. Then fundamentals, you already know what the criteria is. Liquidity, comparative, technical, fundamental, and market analysis. If the market is in a confirmed uptrend, now we know that we are going to take a position in this stock. The only question is how much position size. Okay, that depends on market condition and what has been happening in your trading account, how much risk you want to take, things like that. Position size is a very personal decision. Okay, broadly that depends on market condition. So let's say you decide to take a position, whatever be the position size. There is some yellow dot here. Wait. Anyways, So let's say you decide to buy. So let's move forward the price and see when do we get an opportunity to buy. So see, the week begins. This 24 July week begins. See, on 24 July the week begins. 25th July, it enters the blue zone, which means you have ample time, maybe multiple hours out of uh, 6 hours when the market is open. You get multiple hours. Maybe the stock spent 3 to 4 hours in that blue zone. I'm sure you must have set alerts. Okay. So on that day, we get an opportunity to buy and we buy and see only 2 days have passed, but still the volume has already crossed more than 100% of average weekly volume. So what's the average volume? 261,000 shares traded. Okay. But just in 2 days, have a look at this. Just in 2 days, the volume has crossed uh, more than 100% of average daily volume. Okay. The volume that is above the average daily volume is 100, more than 100% of average daily volume. You understand? So basically, it's more than twice of average daily volume. So that means we still 3 days remaining in the week. So you are getting a proper high volume breakout, right? Which is a normal stage two uptrending strategy. And by the way, before buying the stock, you have to see whether on that at that time the price is above the blue, green, red. So price is above the 50-day simple moving average, the 50 days above the 150-day, and the 150 days above the 200-day, just to be consistent with Mark Minervini's criteria. So you are adding additional level of strictness in your stock selection process. If you don't do that, there's nothing wrong in buying the stock, but you're taking some additional risk. Okay. Then we move forward. See, keep an eye on volume. See, volume continues to increase. See, that week ends, stock continues to go up after multiple weeks. You have to wait for a long time before the stock actually reaches the selling zone. Let's see whether, yeah, see, in this week, so September. So you made the purchase in July, so late July, August, and then September. Okay. So roughly from 17 July, sorry, 24 July to 25th September. So August and then September. In a couple of months, the stock enters the selling zone, which means after 2 months you have the opportunity to lighten up on your position size. So you could either choose to sell all of your shares, or you could choose to sell half of your shares or whatever. Remember, when the price enters the selling zone, you have 5 options to choose from. Number one, do nothing. Number two, sell everything. Number three, sell half. Number four, sell more than half. And number five, sell less than half. These are the 5 options you have. Choose an option based on the situation at that point in time. You have to check the fundamentals of the company. You have to check the current market condition. You see whether there is some big news coming in or not. Those are the things that you would check while managing the trade. And if you think this warrants holding, then maybe sell less than half of the shares and keep the remaining shares. So partial selling is never a bad decision because you are taking some money off the table, you are booking the profits. Okay. So the moral of the story for this video was, look for those 6 things which are simple. It's already marked on MarketSmith. You don't have to do anything. In fact, out of those 6, what's most important is the pivot point. Once you have the pivot point, it's very easy to draw the green shaded area, blue shaded area, and the red shaded area. Okay. So by default, they come out of those 6. So the mainly is the pattern and the pivot point. Okay. The exact buy point and the pattern. As long as you have the two, the remaining you can draw. And these blue items, just before the breakout week, the price should be squeezed or sandwiched between these two blue items, the 10-week simple moving average and the blue shaded area. If the price is below the 10-week simple moving average, it's a problem, right? Because it's probably trading below the 50-day simple moving average. It wouldn't even show up in our filter in most likelihood. Okay, sometimes it can, because The 50-day simple moving average is not exactly the 10-week simple moving average, but you get the point, right? This is how positional trading is done. You have to wait. You see, this is patience. One, two, three. These bars like might look very, uh, it's only 3 bars, but no, it's not 3 bars. It's almost a month of time has passed. So for an entire month, you are sitting at a loss, correct? Because you bought in the blue shaded area. Now the stock has started trading inside this. Thankfully, it did not enter the selling zone. That's the beauty of uh, the weekly time frame chart. If you give the stock enough time, see on this day, on this week, it went down and it bounced back up. It's a green bar, although it's low volume, but it bounced back up. For entire 3 weeks, you had to sit on a loss. Okay. But then you were rewarded for your patience. Even this bar, high volume, the price collapsed, just touched the selling zone. Maintain that patience. Okay, if the setup is right, if the fundamentals are okay, shouldn't be a big problem. Okay, these are the types of trades that William O'Neill used to take, and this is just one example, just to illustrate what you should look for before you consider the stock for positional trading. What are the technical things you should look for? Okay, those 6 things, remember. Okay, thank you so much.